and I have some questions about the first hour dealing range, and I wanted to know that when do we use the opening range compared to the 1 hour dealing range?
Well, every day you use the first 30 minutes. That's always a given. That's going to happen all the time. The first hour's dealing range is always used while price is in close proximity to it. Once we leave it energetically and we're, say like in the afternoon, you can use it for projections. You can do it like I taught with the Asian range or flout or central bank dealers range. That first hour's range, you can do multiple stacking higher or lower. And the measurements of its multiplication, if its entire range, will help yield to daily highs and daily lows, or weekly highs and weekly lows in deference to the day of the week. So you're always using the first 30 minutes. That's always a factor. You're looking for the first percent of fair value gap to occur in there. You're looking for order flow to suggest either going to half the regular trading hours opening range gap. There's a 70% likelihood it's going to happen. But if it doesn't do that and it just starts to take off, chances are it probably may not go back for that half gap, and then you got to look for it to just continuously go higher. But you can use that first hour's range. Many times it'll go above it and then come back down into the upper octant or upper quarter portion of it, and then use that as a means for a discount sensitivity and then start to continue higher. So that's a very simplistic approach to answering your question, but there's a whole lot more that we could, I mean, I could literally talk for a week, for several hours a day and not really scratch the surface of what's available with using both of them or individually.
Mm, okay, and is the first hour dealing range only regarding the 9:30 opening bell, or is it also for like midnight opening range, London opening, all those opening ranges too have a like
When
yeah
sessions open
sessions?
up, you can use the first hour's dealing range, and that same premise is there too. It's not limited just to 9:30 opening to 10:30 close of that time window. It's if you apply it to Asia, you can apply it to midnight Eastern time. You can apply it during the London Open. You can apply it at a London close or the beginning. You can look at the first hour's range between 11:30 start of New York lunch to 12:30. That first hour. There's lots of things you're going to learn this year that you can do with that. But again, like I said, all I'm going to do is create 1,000 more questions that you're not going to be satisfied with the short form answers. But you're always using the first 30 minutes, and the first hour's range is only useful when we haven't yet broke away from it in a trending day type model. Otherwise, that first dealing range or 1 hour of trading, if it's a consolidation day, you'll use all of the gradient levels in it, and you'll use both sides of it, and it doesn't need to go farther from that. But if you're looking at a day where it's going to be trending, where it's usually opening near the low of the day or opening near the high of the day, and you're looking for the close to be the opposite side of that daily range, in other words, a big trend day, you'll use that first hour's range to do projections higher or lower in deference to where you think the market's been going or where it will be going for that day. It'll help you ferret out the daily high and daily low.
Okay, and would you use the first hour's dealing range of each of the sessions like differently? Would you use like the midnight first hour dealing range to project like I don't know, like to trade London, or
There's a lot of schematics,
There's
right?
there's
like
characteristics that's
the
going
same
to
as
be
the opening
specific.
ranges, right?
The application is the same, but certain characteristics per session, like London can create the high or low of the day, but if it doesn't, the New York session will. So there's a whole lot of caveats there. I already know where you're going because I get these all the time in email. I'm not going to satisfy it, and it's going to spur you to ask another question and another question and another question, and I'm not going to be able to satisfy all of it. Just you answered your question initially was, when do we use the 30-minute opening range, and when do we use the first hour's dealing range? And
Yeah.
I told you, you're always going to use the first 30 minutes, always, every single time, all the time. But there's going to be times during that first 30 minutes, the price just keeps on going. So the first hour's range is going to be part of an extrapolated price run, higher or lower. That in and of itself is not it's not useful to me. But if we're back and forth during the first hour inside that range and it's more blocky or it's a consolidation, that's much more user friendly for PM session or post lunch trading.
Okay, thank you.
Optimally,
Very
you're
welcome.
looking for SHC. You're looking for market maker models. You're looking at charter price action models. You're looking at core content month 8. When you take time-based ranges and fill in the blank time-based range, CBDR, Asian range being 20 o'clock to midnight. You're going to take that range and then you're going to measure it. And you're going to look at the standard deviations of that range within ladder legs of price. So not right now. You could use it right now in that same range and ladder in or out of what you're looking for within the schematic as taught in month 8, as well as month 7, as well as month 9, episode 1, month 9. But month 8's where you're going to see a lot of what Michael is explaining right now, very specifically within highs and lows, your first hour of trading, where and how you can utilize that for 2.5 standards, where and how it can come back to the range, where and how it can go to the opposite end of the range. There are very clear schematics laid out in month 8, one of them primarily being the intraday protraction. So you have an intraday protraction and a delayed intraday protraction. So you can apply that fractally within sessions, within a lot of where and how you are trading. And that is very, very clearly taught within month 8.